Welcome back, everybody, to episode 13 of Semiconductor Investing and More, the number one semiconductor podcast in the world, or so I like to say. Like always, I'm joined by an amazing co host. Good morning, Nick. How's it going?
Hey, I'm good, Jose. Nice to be back on the number one semiconductor investing podcast. It's that. I think we've reached that point.
Definitely, Nick. And today we have a great episode, some great lineups. We are going to take a closer look at Intel's disaster of an earnings, a little bit into two major segments in their space. I'll take one, and Nick is going to take another. We're also going to take a closer look at new applied material equipment. UX export bans on China, which have gotten some recent news, and more importantly, some updates to the data center market. So let's get started. All right, guys, so for topic number one, and actually topic number two, we're going to take a closer look at Intel and their earnings, take a little bit more of a deep dive on certain segments. Nick here is going to start off with one segment. Nick, can you share with us a little bit of what segment you're going to be explaining for topic number one and just kind of jump into it?
Yes, so we're going to be talking about Intel's network and edge computing segment. If you look at their earnings press releases, you'll see this referred to as NEX. So during the earnings call, CEO Pat Gelsinger said that they were going to stop research and development investments into this NEX platform. The exact quote: NEX continues to do well and is a core part of our strategic transformation, but we will end future investments in our network switching product line while still fully supporting existing products and customers. Jose, there's a lot to unpack here from just this one sentence that Pat Gelsinger said. Because on one hand, he said it's still a core part of Intel's transformation, and rightfully so. The NEX segment generated 2.1 billion in sales in the fourth quarter, almost 9 billion for full year 2022. So it's by no means their largest segment, but $9 billion in sales is still very, still pretty significant, especially considering that it actually had a record year in 2022. So specifically what they're sunsetting investments on are their network switching chips. So little known acquisition Intel made back in 2019, a company called Barefoot Networks. And it's kind of the basis for a type of chip called the Tofino chip. I've got a little diagram here pulled up that Intel has used to kind of just show where these switching chips fall into a network, like maybe a data center. And they're kind of in this bottom right quadrant of the switch server, the modern switch server, which is the far right diagram. So the bottom right corner of the modern switch server diagram there, the switch chip. 8.9 billion in revenue, annual revenue, basically up for grabs at this point. I think this is, something Intel has to do. They have to focus. But what do you think here, Jose? It's, with it being such a significant part of their overall revenue, good idea or bad idea for Intel?
Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below. First, I want to say that, like you mentioned, that first line, that one sentence from the CEO was kind of confusing. It's like, hey, we're doing good, but even though we're doing good, we're gonna stop doing it to some extent. So I think I find that weird, completely weird, especially because I do believe network switching and just network products at the moment we have heard are a very kind of critical part in kind of the data center market. Maybe not the most popular, but it definitely is not. It's important how fast the data is being processed, so these kind of high performance CPUs can kind of use that computational power. So it's interesting for sure. At the same time, one of my biggest worries for Intel, even though I'm not a shareholder, is that, hey, this is a company that is focusing too much at once. So they're kind of, I guess I would be a hypocrite if I didn't say this was a good thing, because they're kind of eliminating some of that fear that I might have had on the stock. Hey, maybe now we're just really focused on these products. We're stopping focusing on these products. So, but at the end of the day, right, like you mentioned, 2.1 billion. This company, I think, revenue was roughly 14 billion this quarter. So 2.1 billion a quarter is definitely a nice chunk of the pie. And like you mentioned, 8.9 on a yearly basis. Uh, Interesting way, interesting move. I definitely see the pros and cons for this. How about you, Nick?
I agree, Jose. It's confusing, but I think basically the message here, without Intel giving away, they basically didn't want to give away too much information. But I think what's going on here is there's a lot of competition in this space, in this network switching space. I think as big as this segment is for them, it's probably not very profitable. So by ceasing all research and development into it, they can probably still continue to pick up sales for probably a few years. Like this 8 to 9 billion in revenue isn't going to dry up overnight. So they can basically milk it. They can still keep getting some sales over time, and because they're no longer investing in R&D, until this segment goes away completely, it will all of a sudden become very profitable. And what they're going to do with the cash that they save is they'll redirect it back towards their what they have now deemed to be their core competency, the client computing group. So the CPUs for PCs and laptops, data center, the data center group, where Intel is currently lagging pretty far behind AMD in processors, data center processors, and Intel Foundry Services, opening up some of their excess manufacturing capacity to other chip designers and saying, hey, we've got this manufacturing capability, come use it. We'll let you have it.
Yeah. Nick,
so
this is why I enjoy these shows so much, Nick, because I didn't think of it that way, right? When they're stopping this technology, it doesn't mean they're not going to continue to produce, right? They have already developed this technology and they can continue to sell them. The market is probably there. We saw that 2 point something billion that quarter. So even if they're not updating, it still be a nice cash flow for them and be able to use that money elsewhere while, like you mentioned, becoming profitable because they're going to stop investing. So I appreciate that, Nick. And again, this is why I enjoy these shows, because I get to see another picture of some of these kind of topics where it's not just a simple black and white type of answer.
Yeah, and it's hopefully a more intelligent answer than the rant I provided last week immediately after Intel earnings, right? So I'm curious to get your take on this, because what's interesting about this, suddenly $8 to $9 billion in revenue is up for grabs. What's left over is more profitable for Intel, but that also means it could also become more profitable for other companies that participate in this subsegment of the chip industry. So, Jose, if you were going to pick a winner that can scoop up this suddenly orphaned 8.9 billion in annual sales from Intel, who would you choose?
To be honest, Nick, I don't have too many. I don't have too much knowledge in the networking side here for data for the data centers. I know a big player is Mellanox, which is now owned by NVIDIA. So I know they do have some form of networking switching products. So that could be a good winner. I do believe Marvell is another big player in the kind of networking. I know you've talked about it in the past, and I feel like that's one of the main reasons I know this stock. But I feel maybe so maybe those two might be a nice play, or ways to kind of grab at least a portion of that pie. But I definitely would like to hear more of your thoughts on which you believe could be the bigger winner here.
Yeah, I agree with you, Jose. Sometimes I forget NVIDIA acquired Mellanox. NVIDIA, like you said, very much a player in this space. Uh, Broadcom is another, but Broadcom's already huge. They already churn out massive amounts of free cash flow. So I think your other pick, Marvell Technology Group, ticker symbol MRVL, which I have owned for at least a couple of years now, and I've been interested in adding to it at this point. I think they could be the biggest winner because they made a couple of acquisitions um, specifically in this space, like this network switching space, to kind of bolster their portfolio. So I think that could be a big beneficiary for Marvell if Intel's kind of closing down, soft closing this segment means customers go somewhere else. I think Marvell wins.
Thank you for that, Nick. And I know at the end of this episode on topic number 5, we are going to take a little bit more on some data center updates. And just kind of thinking about Marvell, I didn't think about it in topic number 5 when I originally made it. But now I do believe that's it gets me a little bit more excited about learning more about this company. I'm not a shareholder yet, but the more we talk about it, the more I'm like, why haven't I picked up a few shares to kind of at least start an entry position? So thank you, Nick, for topic number 1. Is there anything else you want to share, or should we jump into topic number 2?
Let's do number 2. Let's move on to the next part.
All right, Nick. So for topic number 2, we are going to take a closer look at Intel again, but more at their data center market. They did share a lot of great insight here, and I do believe even if you're not a Intel shareholder, it kind of gives us some great insight of the overall market. AMD is expected to report earnings today while we are recording this episode. So we might get a little bit more updates, but let's take a closer look at the first slide here. So overall, we can see the data center and AI group, as Intel calls it, DCAI. Revenue is down 33% year over year. Operating income is down 84% year over year. I do want to say it's a good thing. This was actually $0 billion, so it was pretty much flat last quarter. So they did make a small quarter over quarter improvement here. The reason for this revenue downturn, Nick, is two main reasons. First, strong competitive market. The only true competitive market in the space right now is AMD. The second reason they're seeing is kind of total addressable market is contracting. They gave us a little bit more insight here. They say that the inventory burn drove server CPU shipments down mid-single digits year over year in calendar year of 2022. They do mention that there are a few markets that are up. The hyperscale market is up. These are kind of your huge cloud providers like Azure, Amazon Web Services, and Google Cloud, but they are seeing declines in enterprises and the rest of the world. Intel does say that, hey, we're still the leader in market share here, and we do have a huge exposure into the enterprise market and China specifically, and that's why we're kind of seeing that contraction a little bit more than maybe some of our competitors. They do kind of give us next. Before I ask your thoughts, Nick, I do want to share one more thing. They do expect that the Q1 server consumption, total addressable market for the server CPUs, is going to continue to decrease both sequentially and year over year for Q1. So definitely not good news for the data center side for Intel. But they do expect the second half of this year to kind of return back to growth. Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below. All right, Nick. So for the next slide, I want to take a closer look at some of the updates they did share to overall investors. They did mention that a data center event is happening later this Q1 of 2023. So we are expected to get some invitations soon. I would expect them to explain a little bit more about their roadmap, about their kind of solutions that they're coming for the data center market. Earlier on January 10th, we did have an event, but that was pretty much that was more of a release event, not much of a kind of heavy roadmap. But it seems like they want to focus on the data center market. I believe this is where investors are really focused on right now. So Intel is really trying to kind of provide some answers here. What I found pretty interesting, Nick, is the following. They're launching numerous server products in the next 2 years. So Sapphire Rapids came out earlier this year in January 10th of 2023, even though it was expected to be released numerous quarters ago. But in the second half of 2023, they are expected to launch Emerald Rapids. And in 2024, they're expected to release Granite and Sierra. And all of these are server CPUs. To me, it boggles my mind, Nick, how they're trying to release so many products at once. It's like they're going to overflood the market. I personally see this as a risk because customers are going to be like, hey, why should I buy this product that's coming out in 6 months, where if I wait 4 more months, I can buy this product? Or it might kind of create some confusion like, hey, you have 3 products in the past 2 years. Which one should I focus on? Because at the end of the day, they need to kind of have some form of driver updates. They need to focus on also kind of the software side of them. And customers are going to be like, which one should we focus on instead? Because which one's going to have the most kind of um, support at the end, the long term of things. So obviously, it's good that they're building so many things, but I do believe it's going to be a nightmare for them. Some final updates I have here, Nick, before I get to your thoughts. They do have the accelerating market, which is their graphics cards for data centers and the consumer space. Originally, that was an individual segment. Now Intel's saying that, hey, we kind of want to split it out and put it both into the consumer market and into the data center market segment. So it paints a better picture of things. So those are kind of the updates, Nick. Any thoughts here on the data center side in general, from you?
Well, it's ugly. It was ugly. It's been ugly for years. They've been ceding market share for quite some time. And there's this whole new segment of the data center market that NVIDIA helped create, accelerators, computing accelerators, that they're basically not participating in at this point. That's that
AXG, I believe.
AXG. Sorry, I wanted to get that right. I was thinking AXG segment that you talked about. Yeah, Jose, I'm kind of with you on this. I think the rapid acceleration in new chips the next 2 years is not a good thing. It will help Intel catch up, which is important, but it's going to be a bumpy road for the next 2 years. I feel the same as I did last week when we did our episode. Intel needs to make this happen, but I don't think Intel stock is the best way to benefit from it all happening. I still think companies like ASML, whose machine will basically help enable these new manufacturing processes take place in the first place, they're going to be the most profitable player from Intel making these upgrades. I see risk here. I'm with you.
So thank you, Nick. I do believe we can now kind of start topic number 3. I am going to send it your way because I know you want to explain to us a little bit about applied materials and maybe some new equipments and how it can kind of affect the overall market one way or another.
Yeah, this one is interesting, Jose. So Applied Materials had a fairly quiet announcement. I think it just got buried under all of the earnings news, but they have a couple of new pieces of fab equipment that will become available. So, of course, fab equipment being the stuff that companies like Intel would use to manufacture their chips. So, Applied Materials made this breakthrough in electron beam imaging technology, which will be used in what's called 3D gate all-around transistors, as well as some next-gen memory chips, DRAM and NAND memory chips. So this is going to be a down-the-road type of equipment addition for Applied Materials. So 3D gate all-around will become increasingly important as companies like Intel play catch-up, but Taiwan Semi and Samsung working on 3 nanometer and still working on developing 2 nanometer transistors. This e-beam imaging technology could become really important because it essentially it allows a company to detect any defects in the wafer, and we're talking at the microscopic level here. Things that are just a couple of nanometers in size. And this new technology allows companies to see at that level very accurately, detect it very quickly, and make needed changes. So I think this is something that will help companies like Intel, Taiwan Semi, Samsung increase production of these advanced chips, but also possibly increase the yield as well of their chips. So increase profitability. Jose, next slide here, though, this is kind of maybe a concerning piece of news in tandem with this. So semi.org released its forecast for wafer fab equipment spending for 2023. You see the dip here on 2022 fab equipment spending over 100 billion. It's going to drop significantly in 2023. Applied Materials comes out with this pretty cool announcement, technology that's way over my head. But now it looks like, well, who cares? Is this a red flag if you're a shareholder in a company like Applied Materials?
Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below. I want to say it's a short-term flag, in my opinion, Nick, because we do know that Applied Materials is a little bit more focused on the equipment side for the memory business. And we do kind of have heard in the past where this wafer fabrication equipment spending decreasing is mainly coming from the memory business. So it seems like in the short term, Applied Materials could definitely see some headwinds. We can see, right, this kind of breakthrough in 3D gate all-around logic equipment is focused for the next generation of DRAM and NAND. So we can see it's very dependent on the memory market. In the long term of things, I don't think it's much. I do think this is great news. We are seeing kind of companies focus more on this kind of chiplet architecture to some extent. This form of 3D packaging is a kind of a subset of that, where just companies are stacking chips on top of chips on top of chips, because the 2D version has kind of hit its limits to some extent, where now it's, hey, we need to also build upwards. So we're seeing this big in the logic side. We are also it seems like now we are going to start seeing this on the memory side, which I think is great news, as we are going to see in a later segment, Nick, that one of the most important portions for customers in data center markets, especially for high performance computing, is the improvement of memory technology. So memory is very important at the moment, especially for the server side. Maybe not too much for the consumer market at the moment. Unfortunately, that's where a big play is for the memory market. But it does seem like they do have a growth opportunity. So I want to say for Applied Materials, maybe in the short term, it might not seem like crazy news. And maybe that's why this got kind of buried down, because no one's really worried about the memory market at the moment as we see that dip. I do believe in the long term, this could definitely provide a nice kind of potential tailwind for the company.
I agree. It'll be a nice add-on. And like all things technology, it's nice to see, really, I guess it's a prerequisite if you're going to invest in a technology company, to see them make big advancements for their portfolio, for their lineup. So I agree with you. I think this was probably never going to be an immediate term boost anyways. Companies put orders in for wafer fab equipment many, many months, if not years in advance before it actually gets delivered. So this is probably going to be a new couple pieces of equipment, this e-beam technology, that will kick in when the next upcycle kicks in for chip manufacturing, which isn't going to be until the second half of 2023, or maybe sometime in the beginning of 2024. So I think the headwind is already priced into Applied Materials stock. It's nice to see a big announcement like this, though, because it could mean an incremental revenue increase. Maybe this time next year, Jose, we're doing earnings and we get to reference this video and like, look at what Applied Materials did a year ago, now paying off.
Definitely, Nick. Just a quick question. I kind of saw it on your slide, but it did give me. I do want to hear your thoughts. Are you looking at wafer fabrication equipment companies right now, or are you focused on another space at the moment?
So I personally own ASML and Applied Materials. Those are my two big bets on wafer fab equipment. ASML, I feel like the tank is full. my my portfolio was full on ASML, especially after it being up like 80% since I bought it back in October 2022, October, early November, somewhere in there. Applied Materials, though, I'm curious to see what happens when they report earnings. It will be mid-February. This is one I might still add to because I think it is going to be a bit more cyclical than ASML, not as cyclical as Lam Research. And so I think there could be an opportunity to pick up a few more shares at a pretty reasonable valuation for the long-term potential. So I like Applied Materials at this point. I'll be paying very close attention to their earnings report.
Definitely. Thank you for that, Nick. So I think we can now jump into topic number 4. So topic number 4 is a bit interesting. We're going to take a closer look at regulation controls, something we've heard a lot about in this channel, and I'm pretty sure all over the news have been covering this since I think the biggest headline was in September or August, I believe, when we heard that companies like NVIDIA were unable to ship certain chips to China. And I believe obviously it has happened since then, prior to then, but I do believe that was since NVIDIA has been such a popular company in the semiconductor market, it got more eyes in that kind of regulation space. So, Nick, we did get some updates. On Friday, January 27th, there was a report by Bloomberg that the U.S. has secured deals with Netherlands, Japan on China chip export limit. This is kind of important because, first, Netherlands is the homeland of ASML. And one thing that I feel like ASML has said before in their earnings is, hey, yes, we are seeing kind of these global exports happening in the United States. At the end of the day, we are more of a Netherlands company. So it's nothing, I wouldn't say that we should worry about, but nothing hitting us at the moment. It does seem like that might change in a bit. I will kind of share a little bit more insight in later on. Japan, I do want to say, is also important because they are the provider of machinery parts used to build advanced semiconductor manufacturing equipment. So we can see it's definitely a strategic play in form of the U.S. side. On the other hand, these are just reports, right? This was reported on Friday. There's no official regulations that have appeared yet, and companies are patiently waiting. ASML, for example, believes that it might not have much impact in 2023, as if something does happen, it takes time to build up regulations. It's not something that's kind of going to go on. It's going to go on immediately. The Netherlands government has to kind of go through their process, so they don't believe it's much impact in 2023. They also believe that at the end of the day, it might not be too much of a red flag, as ASML mainly sells mature products to China due to most advanced lithography machining being restricted in 2019. So they're saying we already have a nice restriction in China, so it's not going to impact us too much, especially if it's more focused on the emerging technology. Now, the question is, again, we don't have too many thoughts, but if these regulations are now going to also being focused on mature technology, because even I think we talked about it in the earnings show, Nick. I believe, I don't know who covered ASML, if it was you or Billy, but I believe one of you mentioned that, hey, even these mature technologies can still be used one way or another to create some of these advanced nodes. Maybe not as efficient, but it's definitely still possible. Any thoughts here from you, Nick, on kind of ASML or kind of just all these regulations that I mentioned in the past few minutes?
Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below.
Yeah, it's troubling, Jose, especially given how global the supply chain is for semiconductors. It's so incredibly complex. It's so complicated, and that's not going away. It never will go away because we're talking about the most advanced manufacturing process ever. by simply trying to cut a key player out of the loop, it can create some problems. I know one of the reports I had read on this, Jose, uh, was that Japan, I think maybe Japan, or maybe it was the Netherlands, I want to say Japan, had some worry that, if we go further in restricting this not just EUV equipment, but like you said, the more legacy DUV, deep ultraviolet equipment to China, they might retaliate. For example, maybe they'll retaliate with restricting exports of solar panels. The world has grown highly reliant on cheap solar panels, which are made out of silicon. Solar panels are a semiconductor. Um, they'll retaliate by like just cutting off supplies of that. So it's concerning. Like you said, it's all reports at this point. We don't know what's going to be in the reports, but as an investor, you have to worry about this, that, it might escalate far beyond what, the intended reason for it was in the first place.
I agree, Nick. I feel like the report, it's more the domino effects that investors should kind of think about. But now the question here, Nick, is how would you think, how do you kind of go about that dominoes effect? Like, what would be your thought process when, hey, this is happening? What do you think of next, Nick? And how do you determine if, hey, maybe this is a market I might not want to invest or focus on?
Yeah. This is tough because I don't like playing politics with my investments. I like investing in things that are kind of free and clear of that kind of stuff. And here we are talking about semiconductors, completely tied up in this geopolitical game here. It is concerning. I will say this for ASML, they've already been dealing with this since 2019. Their EUV machines have been off limits to China for 3 years now. So I think they know how to manage. They know how to manage this. They know how to walk the line, I think, here. And because their EUV machines have been cut off from China anyways, in 2022, only 14% of ASML's revenue came from China anyways. So given the company's growth outlook for 2023, I think China could like disappear from ASML's financial reports and they could still grow in 2023. We'll just have to see how much it affects, the premium valuation that's currently on ASML stock if their ability to sell to China is dramatically influenced by this new development.
Thank you for that, Nick. So now I think we can jump into topic number 5. For topic number 5, I always get excited about the data center market, Nick. So for topic number 5, we are going to share some updates to the data center space. So on my first slide here, I do have a quick update. This was an article from the Next platform. It was called "More CPU Cores Isn't Always Better, Especially in High Performance Computing." And this is something that I believe was pretty interesting because if we're focused in the data center market, we're probably focused in companies like AMD, like Intel, like NVIDIA, as they are kind of big players in this space. And sometimes we believe that, hey, more cores is probably better at the long term of things. And one thing we are seeing is like AMD's EPYC Genoa has released numerous amount of cores compared to Intel's, which I believe does not have the same amount of cores as NVIDIA's counterpart. And sometimes maybe some of us investors might just look at that and be like, AMD has a huge lead. While it might be true that AMD might have a huge lead, it might not just be based on core count. So in this article, they did mention that cores are not important for high performance computing workloads. It is more important for hypercloud providers. For example, if you were an Amazon AWS holder, if you were Azure, the more cores you have, the more kind of people that are able to work on your data server. Because you can kind of split the core counts to different users. So in theory, more core counts means more users, means more money. So it's definitely important for cloud providers, as it allows to provide more usage to customers. But Nick, for customers that are focused on high performance workload, what is more important for them is memory bandwidth, faster I/O, and higher clock speed. So it does seem like the memory market has become, I want to say, a bottleneck to these data center
Mm-hmm.
servers one way or another. And what kind of worries me a lot, I didn't write this on the presentation, Nick, but one thing that we are seeing because of this memory slump, companies like Micron Technology and these other memory companies are slowing down some of the advancements that they might have made because they know the market might not be ready to spend that money at the moment. But at the same time, it's like the server market has this bottleneck to some extent for it. So something to keep in mind. Um, Another thing that I do want to mention, Nick, is they did seems like the it does seem that while new server CPUs like it Genoa do increase their memory bandwidth, this is something if we take a closer look at some of these CPU white papers or presentations, they do mention, hey, we are seeing a X percentage increase in memory bandwidth. But what ends up happening at the same time, Nick, is they end up increasing their core count at roughly the same level. So at the end of the day, that memory bandwidth doesn't really increase for high performance computing. Obviously, that's important for the cloud providers, but maybe not so much for high performance computing. At the moment, this article does mention that Intel, they just recently released the Max CPU series, which is a version of their Sapphire Rapids, but has a little bit less cores and a lot more memory. So it's better for high performance computing. AMD has something similar to it in the previous generation. It was known as Milan X, where it had more memory bandwidth to some extent. It was more memory focused or driven, which was good for high performance computing. So we do see that that these kind of design companies are really focused in this space, or they know this is a problem, so they're kind of creating these niche server CPUs. Before I share some concerns about the author and this overall market, any thoughts here, Nick, on what I just discussed?
Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below.
Yeah, it will be an interesting development to watch. Jose, you alluded to the chiplet architecture that Intel and AMD are just beginning. Even NVIDIA, for that matter, although they're not really calling it. I haven't heard them call it that yet, the chiplet architecture. But that seems to be an issue that chip designers are aware of. That they need to figure out a way to do this more efficiently. Because it's not always about just raw computing power for a lot of what is currently needed from enterprise computing companies at this point.
Definitely, Nick. Before I kind of jump into update number 2, there were some concerns that the author seems to have, and I kind of agree with most of them. First, they mentioned that the current CPUs and the current processors are already becoming very power hungry. As we talked about in previous episodes, Nick, how the energy consumption is becoming a heavy spending portion for data center infrastructure companies. The author does believe that the upcoming APUs, which is going to be that kind of multi CPU and GPU together, we see AMD doing it with their MI300, NVIDIA is doing something similar with their Grace Hopper superchip, and Intel is thinking, we still haven't really heard too much about it, with their, I forget what it was called, Falcon series, where it's going to be a mixture of both GPU and CPU. They believe that those are going to be even more power hungry. So something to keep in mind now, especially as these data center infrastructure companies have this energy consumption problem. The second thing is, we also alluded this in another episode, is data center cooling. Obviously, that power, that energy needs to go somewhere. Data center cooling seems to be another issue. And I just want to kind of talk about that a lot because we mentioned that earlier. And it seems like it's something that's now becoming more norm. And I believe something as investors, maybe we should focus on to see where some of these data center cooling solutions might come from. The final one,
Mm-hmm.
which I thought was pretty interesting, Nick, is a concern for them was software development. At the moment, AMD, I mean, Intel and NVIDIA are still market share leaders. Even though Intel is losing that market share, they're still a market share leader. Being a market share leader means that, hey, more software companies look into you. They make sure to work on your platform first, usually because you are the leader. So more customers are focused in there. So they believe that software development still seems a bit weak on the AMD side because they're not the market share leader, and that kind of might create some form of headwind for AMD. So before we take a closer look at the second update, any kind of thoughts here on the concerns that this author might have had in this data center segment?
Yeah, they're valid concerns, including on AMD. I think we've discussed that at some point in the past, Jose, about that's an area AMD could improve in developing software. One thing that is kind of funny though, after you talked about the data center cooling technology, the liquid immersion cooling technology last week, and you called out Intel as working on that. I think it was the very next morning after we recorded, I saw Intel decided to close down that research division. So I think we're back to the drawing board on looking for companies to invest in to help with the
Yeah,
excess
definitely.
heat problem in data centers.
Yeah, when you sent that, I kind of did a face palm at real time. I'm like, I was just finished editing the episode, and Intel just kind of finished this.
Yeah. No, we
So,
were late.
so a second update here to the data center market, Nick, is the push of AI really helping, being a pushing force for research and development, and for big tech and for these data center companies. And I have some perfect examples. For example, Meta. Meta has Reality Labs. And I do want to say, while Meta is a social based company, one thing that really gets me excited about them is their engineering department. I do believe Meta
Mhm.
has a huge, strong engineering team. They are focusing on a lot, and they are a huge leader in the artificial intelligence world. Thanks to Meta, we actually have PyTorch, which, as we see, was developed by Facebook's AI research group and open source on GitHub in 2017, and now is used as the natural language processing application. It's become such a normal that they've had huge investments from like Google and all these big players, and it's become a norm in AI for natural languaging. So sometimes I want to say we can see how Meta is kind of a engineering play in one way or another. And if they continue to invest in things like AI, I do believe it's going to bode well for data center companies and these companies that provide high performance computing. Another kind of example is Microsoft investment in OpenAI that we kind of discussed, I believe, yes, last week, Nick, where Microsoft was investing a few $1 billion into the company. It kind of, again, just pushes how AI is being a huge pushing force for research and development. AMD, I did mention during their CES, they are adding kind of an artificial intelligence optimization hardware specifically on their chips because they do believe in the upcoming months and in the upcoming quarters, AI is going to need its own chip to be able to process some of the new technologies that might be coming out in the consumer products at the moment. So, finally, Nick, we did see that Synergy Research expects the data center ecosystem. And when they talk about the ecosystem, they're talking about hardware, software, infrastructure, networking solutions, everything in that space is expected to double to $1 trillion in the next 4 years. And that's that in 2022, it was 21% growth and hit about 544 billion. They mentioned one of the huge growth drivers is going to be hyper cloud providers. So here, Nick, and any thoughts here? Obviously, this seems exciting for the overall data center market, but I want to hear your thoughts here.
Yeah, it's super exciting. It's the primary reason I'm still comfortable allowing NVIDIA and AMD, for that matter, to be such a large portion of my personal portfolio. Uh, I just it's just kind of one of those things. It's the potential could be. It's already been huge for these companies, but it's still going strong. And I do like this point that you call out here as well, Jose, about Meta. Um, I think so many investors take it for granted that this is just a social media company, But one of the primary drivers of this hyperscaler network right now is, in fact, Meta. They have such a strong engineering department. They're doing so much work implementing the hardware that companies like NVIDIA are developing and creating really amazing stuff with it. It's a pretty funny little quote here from Meta's chief of AI about Chat GPT not being all that revolutionary. I think that's true. I think companies have been working on this tech for a while. It's just that Chat GPT kind of just went viral all of a sudden. And so suddenly we, the consumer, think, oh, wow, this is brand new cutting edge stuff. It's not. it's been worked on and developed already for years. So these companies are working on that next potential big thing, that next big potential hit service beyond Chat GPT.
Definitely, Nick. And I want to say, I feel like we probably discussed this in this episode. Sometimes I want to say for Meta, it's an interesting take. I feel like as a company, you need to know what kind of products you have, but you also need to kind of understand where the market is at the moment. Sometimes the technology might be there but the consumer might not be ready. And maybe that's kind of going with Meta and this kind of AR and VR push to some way, right? It does seem like to some extent, maybe technology is there, but maybe the consumer market was not ready. But then they had like this secret weapon of something similar to ChatGPT, and they haven't developed. But maybe in the back of their mind, they're like, we have this ready, but maybe the market might not be ready for it. So they don't release certain consumer products like that. I wonder if OpenAI ChatGPT is going to create this ripple effect now where maybe some of these companies that do have this kind of AI technology are going to be more inclined or more likely to release this technology because they might have seen, hey, maybe the market is ready for this space. So Nick,
yeah,
just
for sure, for sure, Jose.
So Nick, I want to end this episode with just one final question. We saw the data center market is huge, right? We saw Synergy Group expects a nice growth rate here. We kind of explained this whole ecosystem from hardware, from infrastructure, from software. You mentioned two of your, this is why you feel comfortable holding companies like AMD and NVIDIA. For me, it's the similar reason. Both those two, I believe, are my top three, are two of my top three holdings. Depending on the day, it kind of shifts between which one's number one, I believe. What other companies outside of these advanced technologies are you kind of focused on a little bit more? Are you focused a little bit more on the software side, maybe some other hardware plays, maybe a little bit more on the clouding providers? Outside of these top two, I'm pretty sure you're invested in all of them. Which one do you believe is your biggest bull case, or which one's the one you're more excited about out of that group?
Well, companies that can build a software service on top of their hardware service are incredibly powerful. That's the case with every single one of the companies that have ever reached or currently are in the $1 trillion valuation club. The big tech companies, Microsoft, Apple, Google, Amazon, they have both. So I think if we're going to see a semiconductor company make that push and join that club, NVIDIA is it because of the software. It's the best business model ever created. You write something once and then you can sell it an unlimited number of times. Talk about profitable business model, right? Beyond
Definitely,
that,
Nick.
though, I think what we discussed earlier with the networking chips, and you alluded to this as well, with there being problems with a bottleneck with data moving in between the various parts of a data center. I get excited for companies like Marvell Technology Group because their networking devices can help solve that problem, can help alleviate the data bottleneck for these high performance computing and hyperscaler operators.
Definitely. Thank you for that, Nick. And I want to say thank you for another amazing episode. That wraps up for episode 13. Make sure to subscribe, guys. Make sure to follow Nick and his channel. All the information should be down in the pinned comment. And make sure to stay tuned, as this Friday we will be releasing another earnings episode. And I do believe Billy is going to join us again. So, Nick, thank you again. Take care and see you next time.